Yesterday, we told you the AI trade was the most crowded, most expensive corner of this market, priced for perfection. Today, the bill came due. One of the biggest companies in the world lost $300 billion in a single session. And the market closed at a record high anyway. If that sounds like a contradiction, it isn't. It's a rotation. And it's the whole story of the day. Start with the scoreboard. The Dow surged 875 points, up 1.73%, to a record close of 51,562. The small-cap Russell 2000 jumped 1.59% to 2,939. The S&P 500 added 0.41% to 7,584. And the one index that fell? The tech-heavy Nasdaq Composite, down a hair, essentially flat, at 26,831. So the Dow makes history, and the Nasdaq is the only loser on the board. That gap is everything. The split came from one stock. Broadcom reported earnings, and on paper they were strong, revenue up nearly 50% from a year ago. But the company reiterated its outlook for the year instead of raising it, and its forecast for AI chip sales came in softer than investors wanted. After a run like Broadcom's, good wasn't good enough. The stock fell as much as 15%, erasing about $320 billion in market value, one of the largest single-day losses any company has ever taken, behind only Nvidia's record wipeout last year. And it pulled the whole chip complex down with it. Micron, SanDisk, the semiconductor trade broadly. Here's what makes today different from an ordinary tech sell-off. The money didn't leave the market. It rotated, out of chips and into almost everything else. The gains were broad. Healthcare led the way, up 3.14%. Financials gained 2.67. Real estate added 1.87. Inside the Dow, United Health jumped more than 5%, JP Morgan rose 3%, and even Alphabet broke a losing streak to climb about 4%. The unglamorous, cash-generating old economy names, the exact stocks left behind during the AI run, had their day. 8 of the S&P's 11 sectors finished green. The backdrop shifted to support the move. Oil reversed hard. Crude fell about 3%, back toward $93 a barrel, as traders bet on a U.S.-Iran breakthrough, taking yesterday's inflation scare off the table. And the bubble warnings got louder. Ray Dalio said investors are confusing buying AI stocks with investing in the technology, and that valuations may have run too far. All of this lands the day before the jobs report, the big one, and a Federal Reserve that, under new chair Kevin Warsh, is in no mood to cut. Rate cut bets for this year have largely been priced out. So a hot jobs number tomorrow wouldn't be the relief it once was. It would just harden a Fed that's already leaning hawkish. The rotation you saw today is, in part, the market positioning for exactly that. For 2 years, the market and the AI trade were the same sentence. Today they split in two, and the market chose the boring half. That's not a crash. That's a verdict. We cover the markets on the days that actually matter, with explainers when it helps. Hit subscribe so you don't miss it. We'll see you next time.